Mr. Mistry, thanks so much for joining in. A lot of questions. Okay, first, your initial thoughts on the policy decision and the change of stance.
Well, I guess it was absolutely in line with what was expected. My expectation was a 0.25% cut in interest rates. There can a change in the stance to accommodate it. There could have been some expectation of even a CRR cut, but probably the CRR cut did not happen, taking into account the fact that over the last 10 or 12 days, there has been liquidity level in the system has again become positive.
Mr. Mistry, what is your understanding of the fact that the RBI governor has said that already transmission of 21 basis points has happened of the 50 basis points cut that has been mentioned in the last two policies, and he's expecting a faster transmission and a bigger transmission to happen in the near future. Are you on the same page, and do you think that could happen?
See, when the earlier rate cuts were happening, the overall liquidity in the system was negative. And because the system liquidity was negative, banks did not have the ability to cut their deposit rates. If the deposit rates did not come down, the cost of funding would not have come down, and therefore they would not have had the ability to cut lending rates to the same extent. Now, if the liquidity level in the system becomes reasonably high, and there is enough liquidity in the system, then that will give banks the ability to cut their deposit rates and therefore the lending rates.
Mr. Mistry, would you have thought of some bit of mentions in the release or otherwise on the current issues within the NBFC space? He categorically mentioned that RBI is monitoring the activity in NBFCs and HFCs, but since they don't fall under the purview, not too much was spoken. Would you have hoped for some mention, some clarity, some indication of what the Reserve Bank will do to support the system?
I would hope that in the next few days, RBI will come out with some measures to find a mechanism by which the liquidity crisis that the NBFCs are facing is to some extent resolved. Maybe one of the ways it could be done is to just give confidence to the banking system to start lending money again to NBFCs. A first step in this direction was taken a couple of weeks ago when RBI imposed a liquidity requirement for NBFCs. So the idea of doing that was to give confidence to banks to start lending money again to NBFCs.
Would you believe further rate cuts and a heightened clip could happen as well? By changing the stance, the direction seems to be clear, not the pace really. You look at the world rates too very closely, Mr. Mistry, as our previous interactions have shown. What do you anticipate through the rest of the year? My anticipation is that there will be further cutting interest rates over time. Quantum is difficult to say. Difficult to say because it's so much dependent on what's happening on so many fronts in the months to come. But having said that, clearly the trajectory is going to be towards lower lending rates, lower interest rates. Global growth has slowed down. With global growth slowing down, oil prices have come down. So that ensures that inflation remains low. And if inflation remains low, then that will give RBI the ability to keep cutting rates.
Mr. Mistry, you spoke about the surplus in the system. And the governor highlighted about 66,000 crores in early June. Just the fact that is there more expectations from the market and from the system for the RBI to continue injecting durable liquidity into the system despite being in a surplus now?
Yes, I think ultimately at the end of the day, banks are to lower their lending rates. They can do that only if they can lower the deposit rate. And to lower the deposit rates, they should be confident enough of being able to raise money even at lower rates. And that confidence would come only if there is adequate liquidity in the system. So I would hope that the OMO operations will continue.